I'm Jonathan Elkoubi.
And I'm Danny Gallo.
Welcome to the Standard and Rich podcast. On today's episode, we will cover the short term stock market news, and then Danny and Jonathan will battle it out for the stock of the week. They'll pitch their ideas and see who wins. Stay tuned for next week to see the winner. We'll start off with some short term stock market news. Danny, how about you kick it off?
So obviously the big news in the market this week is all the geopolitics that's going on in the world, especially with Israel and Iran, with what happened last weekend. Um, so you could see with the stock market this week and the end of last week, it's been fluctuating, not knowing which side to go, and with the attack that was happening and now waiting on what Israel is going to do. It's been fluctuating in the market, and you could see that with not only just the markets, the oil price, and all the commodities. Especially now, there was more sanctions on Russia this week on exporting copper and certain metals to Russia. So that's brought certain commodities up in the market this week. What about you, Jonathan?
Well, I wanted to talk about gold. I noticed that in February, gold was around 2,000, and now we're April 15th, and gold is 2,400. That is a 400 jump, around 20%. And the reason of this is I think investors are starting to realize that inflation is here to stay, and we're not gonna. It's not like a short term thing. We're not solving the problem. So investors are turning to gold, and I think you mentioned before, J.P. Morgan said they predict gold to be 2,700 by the end of the year. So
You are right about the amount, but it is Goldman Sachs that
Goldman
referred
Sachs.
to that number.
Okay.
Yeah.
So thank you for the correction. But I'm just very bullish on gold right now, and I think that inflation isn't going anywhere in the short term future. You want to kick it
Yeah.
off with our next stock battle? Our first stock battle.
Our first stock battle. Are you ready, Jonathan, to
Yes.
feel the wrath of my stock? A lot of people won't like this type of company, and I
That's
think
good.
people won't like your type of company that you chose today.
It's
I
good.
did
Controversy is good.
decide to go with Exxon, so ticker XOM. Obviously, like we were just saying, there's so many tensions in the geopolitics right now. Um, there's a certain part of that area that produces 20% of all the oil output in the world. So obviously, if there's a lot of tension there, and Israel does decide to strike back, and then Iran strikes back, and that puts a lot of that part of the world in uncertainty. I think oil prices would go up from that. So Exxon would be perfectly situated in that to be able to grow in a short-term period. It's also full disclosure. It's also my uh, fourth biggest
Holding.
holding. Yes, exactly. Thank you, Mr. Jonathan.
So
So they have good gross margins. The EBITDA is at 21%. Um, their PE ratio is at 13, which is in line with what they've been doing recently. They just came back down up. They had a big downfall. They went from big downfall. Well, they went from 119, 120 down to 96, and now since all the turmoil that's been happening now, it's back to 119.
so they're at an all time high right
Now
now.
they're close to an all-time high, or they passed their all-time high. They're like really on the cusp. But with everything that's happening right now in that region, I think that even if they are an all-time high, it's not gonna change anything.
Is this a
It's
short-term investment?
well, oil is a cyclical business. So when I got into Exxon, which the oil price was at 75, now it's at 85. I love trading that 70 to 90 zone. But with all the trouble that's happening right now, I'm taking a little bit more risk, and I think it should go a little bit higher. I think they have at least. I have no way of predicting it, but I think another 10% could be played here.
And what's the time horizon?
Um, me honestly, I'm very with oil. I'm very short term. So I'm trying. I'm my out for Exxon is like I told you this week. It's around 132. I got in at 102. So keep that in mind as well.
All right. And
I
like,
keep buying the dips as well every time I see it go down a little bit. Now it's at 119. Maybe I'll knit at it a bit when it goes a little bit lower, but at the same time, I could get it here if I'm thinking that it's going to go back to 132.
are you gonna
Back,
are you
no,
gonna
not
increase
back
the
to, but to.
position? Make it any bigger? Size of your portfolio?
I'm definitely thinking about it. I think about it every week. At a certain point, I was buying every week. I'm at a pretty big spot in my portfolio right now, but if it does go a little bit lower, I think I could definitely not rule out the fact that I could add more to my portfolio.
All right. I'll come in with the negative thesis on this. I mean, the if you look at the 10-year earnings chart, the earnings are really not consistent. That's just due to the volatile nature of commodities. And like next year could be completely different situation with geopolitics. Oil prices could be completely lower. So for a long-term investment perspective, I know you were saying this is short-term, but from long-term's perspective, it's kind of risky just because of how unpredictable it is. And how unpredictable the short-term is another factor of risk that we have to consider, you know? And I was just looking
Yeah.
at their balance sheet. Their balance sheet is very healthy because the last couple years were really good for them. They have a lot of cash, and I'm just like trying to think here. They have last year's cash flow was free cash flow 2023 was 33 billion and free cash flow of 2022 was 58 billion, so we see a sharp decrease there. And I don't think oil will be going to what it was in 2022. What do you think about that?
And like I told you, like right now, I think the price is let me go check right now after market
It's at 86.
86. Yeah, I still think there's like amid all these tensions, I still think they could go get another 10%. Like 90 is comfortable. I think it could hit 90 pretty comfortably. It has to go over that 87 that's been rejecting recently. I think the second it goes there over that 87, you could see that 90 being that next target. You honestly, like we said, it's pretty short term. Our horizon on this and my view on it is pretty short term as well. I still have some good length, even if it pulls back to be okay with it. Um, but like I said, I think 130, 132 is nice for what I want. Yeah, like you said, their cash to debt ratio is pretty good. They could pay off all their debt and still have 17 billion in cash. Um, free cash flow is 10%. They're going into new projects as well. Their dividends pretty solid. Their payout on their dividends 41%, 41.41 if you want to be a little bit more specific. Um, you're right. It's been going down in sales. I think as the world transitions to newer renewable energies, I think it will hurt a little bit. But in the short term, I think it's a pretty good play.
All right, so I think we could transition over into my stock of the week. And drum roll, please. The stock I chose is ticker MO Altria, a cigarette company. The reason I chose this stock is because of the insane cash flow compared to what the price you're paying is. So the market cap of the company is 72 billion,
Oh shit.
and I'll just jump right over the free cash flow line. It's 9 billion free cash flow. That is just doing the math in my head right now. It's almost like an 8 free cash flow multiple. And if I just jump right over the income statement, the free cash flow and the income are about the same, 8 billion too. And their balance sheet is not that bad. They do have 20 around 25 billion in long-term debt, but with 8 billion in free cash flow, they could pay that off pretty quickly. And we're looking at a 10% dividend year with some more stock buybacks consistently every year. So they've been buying back like a billion in stock every year. They've been paying out 6.7 billion in dividends, which is roughly 9.5%. And I just think it's a great long-term hold for like a dividend portfolio. It's at an all-time low right now for like the year, and I think it's a great time to buy. I think you'll get the 10% dividend return, the buyback, and the growth of the stock. It'll come out to like a 25% return for the year, you know? So I think it's overall a
Mhm.
good compounder. What do you think?
So I'm going through their numbers here. Their dividend payout ratio is pretty high now at 84%.
Yep.
Um, Marlboro shipments are down a lot since last year as well. They went from 75. What is this calculated in? Like most of their cigarettes have been going lower and lower.
Cigarette sales.
Discount cigarettes, discount cigarette shipments, transactions have gone down from 2022 to 2023 from five. It's not 5,000. I think it's. I'm not sure if it's calculated in billions. Yeah, probably billions stick. So 5,406 to 4 billion from 2022 to 2023. Premium cigarettes went down from 3.8 billion to 3.5 billion, so that's 10% decrease. Their Marlboro cigarette shipments went down from 75 billion to 68 billion. Uh, you do see an increase in their e-cigarettes. I would guess the on is their e-cigarettes. That's increased from 82.5 billion to 114 billion, which is which is nice, but their bread and butter is really those cigarettes, right?
Yes, but they
So
do have like a lot of pricing power on the cigarettes, so they could increase the price as the demand drops, and that's why we see a lot of revenue growth or like profit growth over the years. I think that's where most of the profit growth comes from. If we look at the free cash flow growth, you see in 2016 they were about like 3.6 billion, and then you see 2017 they're at 4.7 billion, and now all the way jump to 2023 they're at around 9 billion. So that's a lot of growth in those couple of years. I think that's from acquisitions and just raising prices probably.
uh, um, sorry, I'm just looking at their investor charts as well. Hmm.
But I do agree that cigarette
It's
demand is dropping.
yeah, cigarettes. That's the thing right now. Before in my day, I guess not my day. I guess my parents' day was that the cool thing was to smoke cigarettes. I do see a lot of people with e-cigs and stuff like that. So if that's a growing segment, maybe it'll help. But I know a lot of regulations trying to put that aside because younger generations are kind of is starting to smoke a little bit earlier on. Um, because of the flavors. I know. I think the here in the Quebec government, I think they were trying to ban the flavored e-cigs because of just because of that, because of the young kids that get into it a bit earlier on. I don't know. I don't like these. I don't like charts. I'm gonna say charts that look like this. But yeah, like when did it peak? 2017? 2017, I think was the year that it peaked, and it's been not even 2017. So
Their peak was
there was,
06, 07.
yeah, '06, '07. Then it crashed. Then it went back up. Man,
Well,
I got
it's definitely
destroyed.
not a growth stock. It's more of a dividend play.
Yeah.
Like you're still extracting the cash from the company. You know what I mean? You're getting like a yield on top of that. So even if the
Is
stock
it paid
crashes,
off a month? Is it paid off monthly or quarterly?
I'm pretty sure it's quarterly. But there's also the
Yeah.
a morality reason
Y-
people won't invest in this. People don't like
Yeah.
being affiliated with these type of
Like,
stocks.
yeah, I guess like the ESG types of investors or investing companies or banks and stuff like that that have like a ESG target or
Probably.
investor group probably don't invest in this type of company, which is funny because they do invest in like the Exxon and stocks like that. I was talking to actually an ESG investor that came that I saw this week, and she actually said that one of their holdings was actually Pembina Pipeline. So I'm like, Pembina Pipeline, how is that ESG like leader? They're like, oh, because they invest money into greener energy as
Uh,
well.
that's a bit hypocritical.
But yeah, you must be right. I think like I was never interested in investing in let's say cigarette companies just because the I guess the morality of it, like you said. But I would be the same way with oil, but I still invested in it because
Oil and
just the
cigarettes
trend
is
that
not
it's
the
in right
same.
now.
Like cigarettes is
Yeah,
like
you're
killing
right.
people, you know. Oil's not really
Yeah,
doing anything bad. It's more
yeah, no,
good, you
you're
know.
right. Well, yes, yes, you're right. You're right. Well,
But
it could, yeah, yes, yes, yes. But yeah, so no, I get why you got it. A lot of big investors out there, or not FinTwit, but Fin YouTube, I guess, are going into these not e-cigs but cigarettes companies because they've been getting destroyed. That's actually why I got into Exxon at one point when I saw that 20% drawback. I was like, okay, it's a nice time to get in as well. Plus with the oil. Um, so yeah, I could see why you got into this, but it's it's hard to time like when that bottom's gonna be as well, right? It's like
yeah.
how much more is it gonna go down, and then is it ever gonna recuperate? But that we'll never know as well.
Well, we don't need it to recuperate with the dividend, you know.
Yeah,
Get the money out, and the
yeah. If
dividend
you
is consistent.
if you're in for the dividend and the dividends are not gonna make you sell the stock and you're gonna stay in it because you like that 9.43% yield, and that won't make you sell it when it's down like 10% or whatever, then fine, keep it. You know what I mean? As long as you don't sell it and you keep it more long term.
Yeah. Full disclosure, guys. By the way, I own the stock. I do hold shares in this company. Full disclosure.
Yeah.
And
So we are doing it short term. Like, Exxon for me is still a short term. It is one of my top assets, but it is a short term play just for me. I should be out. Like I said, when that 130, 132 zone is where I'm gonna start trimming, I'll probably be fully out.
we'll see who wins next week. By the way, guys, this is not financial advice. This is for entertainment purposes only. Do not take any of our words for this, and do your own research before you buy any shares in any publicly held companies. So,
Yeah, do your own research. We are not financial advisors. We just like talking stocks and buying stocks for ourselves. So our situation is not the same situation as you guys. So we all invest differently. So just make sure you invest time, and if you're not sure, just you could get a financial advisor or just invest in. broad-based ETFs. That's it. You don't want to break your head, just buy ETFs. Buy
Dollar
the
cost
S&P
average.
500 and dollar cost average and go to bed
Sleep sound. Sleeping like a
and
baby.
sleep soundly. Exactly, exactly.
Anyways, I think that's a good place to end it off. 20 minutes in. It's a good first episode, no?
20 minutes? Yeah, let's end it.